Yes, yes. Sorry guys. I hope everybody is doing good. I just wanted to do this video before I sleep because I tried to do it during the day. And then you said it was blank. I don't know. I was using Zoom, but I tried to look for another thing, another screen recorder that I can use to record these videos and stuff. So yeah, I'm listening to the healer, by the way, guys. You should check him do aka TLP. That guy is a ghost. A goat. A real goat. So starting from the weekly time frame, I just want to start here because price fulfilled the buyers in just how many days? 2 days. In 2 days. It finished the buyers in 2 days. You understand? What was the bias? The bias was for price to reprice back inside the range. Why price has to retrace like have to reprice or had to reprice back inside the range? The reason was the market took out this old low and also this old low. As you can see, the dealing ranges from that high and to this low, and then this one was for liquidity, and then price fill in the gap. It went to the downside, and then we broke the low. So after breaking the low, what I was expecting, as you all know, how the IPDA or the algorithm they move price after taking out a high or a low, they trigger the sell stops of retail logic traders, and then they retrace back inside the range. And then the market retracing back inside the range, it retraces to the fair value gap. Remember, the market is only drawn up or down to fill in the gap or to take out liquidity from old lows and old highs. That's something that must sink in your mind. You understand? So with the weekly bias, the bias was for price to go to the upside. Why it has to go to the upside? Because price took out sell side liquidity from this low and to this low. You understand? So how can we get the setup? You feel me? This is just the bias. You starting it as I did that day. It was what day? Sunday, as I did Sunday, because every week before a new trading week begins, you must go to the weekly time frame and be like, what is the next weekly candlestick most likely to do, and why does it have to do that? You understand? And then you go for the daily time frame, and then you look for liquidity pools, and then you scale down to smaller time frames, and then you look for entries. Okay, so let's go down to one daily time frame. Where was the liquidity and stuff? Understand? So the liquidity was this old low and also this old low, as I showed you from the weekly that was taken. Where was another liquidity pool? Another liquidity pool was this high, because the dealing range could be from this high and to this low, but I knew that this low or this high holds liquidity. You understand? Because a lot of people are looking at what? At this high, because some they're gonna say it broke the structure, so it returns to this block or whatsoever, having a double top. I don't know, and it doesn't matter to me honestly. So a lot of people were looking at this area. So what I was expecting price to reprice back inside the premium level to do what? To rebalance price. So where was the gap I was looking at first? This is the first gap, and then from the gap I would look for what? I would look for cells that are gonna come down and rebalance price inside the range again. So price went to the upside, and then it took out this buy side liquidity, and then it reacted from the gap. As you can see from now on, as the market opened, it's going down, but Honestly, I want to see price reaching that one. I think NFP is going to be the factor for that one because it's NFP week, by the way. You understand? So what's going on? So as you can see, from the NFP week, this is the recent high and this is the low. This was the liquidity, and also this one is also a liquidity pool. And then I will looking for entries from those fair value gaps above from this gap because price, I believe price has to retrace back inside the range to close down the price, and then it can later come back. You know, I'm expecting it to move like this, at least come down to these ones or to this one, and then it can later come back there, and then from there it can sweep off this low, continuing with the like with the monthly like with the monthly bias to the downside. So how did I frame the setup and how I was able to trade this thing? So I shared my entry on my on my Instagram account. I'll take you all through everything that I tried. You understand? I didn't share this setup to anybody from the mentorship, and I'm gonna explain why I didn't do it. Understand? So the market when I opened, like when I woke up that day and I opened my laptop and stuff, the market was from here. Let me highlight it. The market was from there, and then the market being from there, what I was expecting a shift. You understand? And I'm gonna take you to the 5 minute time frame and where I saw the shift. You understand? So the market it went to the upside. From the upside, the market going to the upside, it was taking out what? It was taking out buy side liquidity because it's a breaker structure. It returns to the order block, they sell. You feel me? The so-called SMC traders, they do what? They sell from here. They sell from here. And then and also retailers, they're gonna be saying it's a double top whatsoever. They also sell there. It's fine. And then they're coming again for a third touch, the retail logic traders. First touch, second touch, third touch, and then the market takes them out. After taking them out, it triggers their sell stop, like their buy stops, because it took out buy side liquidity. And you know when you're trading retail, like a retail trading, you put your what? You put your buy stops and your sell stops below or above the highs and lows. For an example, from here, you're going to put what? You're going to put your sell stops so that the market, when it goes down and take out the low from being on a double top, it's going to trigger your sells to the downside and it perfectly worked on this one. So even here, after taking out this high, they're going to put their buy stops and then it triggers the buy stops and then it takes them out. I understand. So, and also what I saw was this low. This low was very important on a market. This low was very important. Let me remove this box quickly for now. This low was very important. Why is this low was very important to me? I was like, this is the low that did what? That sponsored the move that broke what? Or that took out sell side liquidity. So this low is gonna be my what? Is gonna be my sell side liquidity because it's the low that sponsored the move that went to the upside to take out this buy side liquidity and give me the market structure shift. You understand? This is me thinking about this now on a what? On a 15-minute time frame. And then I'm gonna show you why I didn't share the setup. What I was thinking. I was thinking about a low risk setup that was gonna be good for everybody. So where was the low risk setup that was gonna be good for everybody? This was the low risk setup. Where was it? This is the shift in market structure N3. This was the shift. And then the shift is in what from here? There is a gap from here. So this setup, I saw this setup as the best one for everybody because this one was more risky. But with my experience, I took this setup and I'm going to tell you why I took this setup. You understand? So let me remove these ones. So what I saw from here was like, okay, my dog, where is liquidity, Kyle? Liquidity is from this low. Why this low? Because this is the low that sponsored the move that broke that those relative equal highs to take out buy side liquidity and trigger the buy stops and then comes back for them again to be taken. And then again, what I saw from here, I saw these relative equal lows again. These were relative equal lows. People were expecting the market to react from here. How many touches from here? It's one from this order block, one, two, three, and four. I don't know if they count this one, two, and four. So this was the liquidity that was taken. You understand? And then the market coming here was more like, you know, I don't know how can I say it, but the market coming here, what was the market gonna come for? Was going to come for liquidity? No. Liquidity is already taken. Where is liquidity taken? The liquidity is taken from these relative equal lows. First touch, second touch, third touch, fourth touch, and then fifth touch. And then it takes them out, trigger the sell stops again, and then it went to the upside. For me, this is a breakaway gap. This gap is not yet fulfilled. And then my stop loss is above this block, and then I bought to the upside. And then the market really went to the upside. And I shared the setup to the group because I was also expecting the market to do what? To come to this gap. But I did what? I bought from here because of what? Of what I reacted on. You feel me? Because this one is more valid because there's what? There's liquidity that was being taken, and then there's a gap. This is my stop loss, and then I buy. This one too is more like a valid setup. Shift in market structure, a fair value gap, we buy. Shift in market structure, comes back to the gap, we buy. You follow me? But this one was more valid to me because it had what? It had liquidity and it was more risky. You understand? Because we mostly look for market structure shifts from the 5 minute time frame and also the 3 minute time frame going down. But this one I took it from the 15-minute time frame. And then I came back here and then I put the gap from here and to here. My stop loss was here. And then I was like, okay, let's go, my boy. If it buys, it buys. But this is it. And this is how I understand the concept. So I must treat what I understand and react to what the market is giving me. And then the market gave me, and then it went to the upside. And I'm sorry for not sharing this setup, guys. It was more like I wanted to not do stuff, you know, and make people be losing and stuff. So what I was thinking or the market is gonna do at first, I thought the market was gonna react from this gap. From these gaps, it didn't react, took me out because I was also on my mind having a thought that the market might come back. But the market didn't do that. You feel me? And then I understood up until the market it went to the upside. And I was also looking for sells here. I looked for sells from here and then I went out on a break even because I saw the movement of the market. And then after that, I took a sell. I took a sell from this gap, and then the market took me out. And then I was still on this buy. I didn't close the buy, and I haven't closed the buy, but I'm gonna close it soon. So this is what happened, and there were no setups for buys for me. And with the strategy, how I traded, there were no setups for me. So I was only looking for sells. The only buy that I was looking at was from here, and I was gonna look for another buy from this what? From this gap again. You understand? So this is how the market went, and it has already fulfilled the buyers. So the market fulfilling the buyers, what do I think the market is gonna do? And so what I think this shit is gonna do, guys, I think it's like today is gonna drop out and then it's gonna come back to the gap, and then from the gap it can come for this low. You understand? But I'm gonna react to what the market is giving us. But I also wanna like relax and not trade up until NFP. But nah, let's do it, man. Let's do the NFP way. So yeah, this is what happened, guys. check you up later. I'm gonna check you up later. I'm gonna check you up